Hi, and welcome to episode 6 of Rapid Rundown, your one-stop shop for last week's most important market-moving news. So let's jump right in. So the first news of today is that rate cut hopes are down, and this is after Fed officials have struck a more cautionary tone, and now the market is betting on a 47% chance of a December rate cut. And this led to US Treasury yields going up and the US dollar being stronger versus other currencies. So the shift in rate cut expectations is making people rethink their risk positions in stocks, but also other markets like, for example, crypto. And the second news of today is that the US government shutdown has ended, but markets pull back anyway. So the US shutdown is over, but stocks are sliding anyway as tech and AI names look too pricey. And money flowing into equity funds has dropped sharply, showing that investors are being more cautious. And big indexes like Nasdaq are taking hits after a few months of gains, especially impacting tech stocks. So this means slower growth, doubts over rate cuts, and high exposure to tech and AI are spooking investors. And the third topic of today is the crypto slump and the paradox with institutional entry into crypto. So as you might have heard, Bitcoin has hit a 6-month low as the risk appetite in markets is kind of drying up. And the crypto fear and greed index is screaming extreme fear, with the index currently sitting at 18 out of 100. However, over half of hedge funds now hold crypto, which is up from last year, despite prices falling. Most funds are still playing it safe with crypto, keeping allocations lower, usually under 2% for long-term investments. However, this indicates that this is less of an apocalyptic scenario as some tweets might have you believe. And the fourth topic of today is China, with weak economic growth and its 15th five-year plan. So China's economic growth is slowing, and investors are worrying about how strong China's exports-driven economic model really is. And amid this, the 15th five-year plan from 2026 to 2030 was released, and it's all about tech self-reliance, smarter manufacturing, and boosting domestic spending. And this plan also pushes new industries like green energy, AI, and high-tech services. And despite the slowdown in economic growth in China, more foreign investors are showing interest in China again. And to be concrete, inflows into Chinese stocks totaled $50.6 billion US dollars from January to October this year, up from $11.4 billion US dollars in 2024. And the fifth and final topic for today is Europe and the UK. Or just Europe if you want to include the UK in Europe. European economic growth is weak, with many economies stagnating or only growing a bit, which brings into question the narrative about an economic rebound in Europe. And European equities are under pressure as US policy uncertainties and underlying structural risks in Europe come together to dampen the risk appetite. And on the other side of the canal, UK is facing renewed fiscal uncertainty because the UK's government U-turn on income tax plans shook confidence and drove up borrowing costs. And currency and bond markets reflect these risks. For example, the pound has recently lost ground against the euro, and UK gilt yields are up. And that was it for this week's Rapid Rundown. Comment down below what other news you watched last week, and stay tuned for next episodes and check out my other videos. And if you're a professional investor interested in robust trading results, check out autotradelab.com. And otherwise, hit the like button, smash the subscribe button and the bell. And thank you so much for watching.